Hello guys, this is Aman from GyanDhan. At GyanDhan, we have helped 15,000 plus students in getting 5,000 crores in abroad education. In today's video, we are going to talk about something called Co-Applicant, which is something that you will hear about when you are applying for an abroad education. Before we get started, I would recommend you to subscribe to our channel so that you can get a notification whenever we are releasing an abroad education loan video. So let's start. So what is co-applicant and why does the bank ask for it? The co-applicant is someone who co-apply for a loan with you. So the co-applicant will have the same obligation as the applicant, and in case the applicant doesn't repay the loan, then the co-applicant is obliged to repay that loan. Usually bank prefers it to be from the immediate family member, but then there are exceptions which we will talk about. So why does a bank require a co-applicant? There are two reasons for that. One is they want to reduce their risk. The second is, and which is more important in this particular use case, that the applicant will move abroad and will not be in India, and they need somebody who is in India who is obliged to repay the loan, just in case if there is a known repayment of the loan, they can go to that person to recover the money. So who can be the co-applicant? It varies by the organization. For example, public sector banks, when you are applying for a loan with collateral, they usually ask parents to be the mandatory co-applicant and the property owner. So for example, if your parents owns the property, then obviously they are the property owners and the co-applicant. But let's say the property is owned by any third person, which is allowed, by the way, that person will also become the co-applicant. So if the property is owned by your uncle, your aunt, or even a friend, in this particular use case, the friend can be the co-applicant along with the parents. And you are understanding it correctly, there can be multiple co-applicants apart from the applicant on a single loan structure. In case of private banks, they ask for immediate family member as the co-applicant, and usually they can offer loan without collateral, and usually they are approached when there is a need of an unsecured loan. You will understand this logic in our other videos on our YouTube channel. The third is NBFCs. Now NBFCs is non-banking financial companies. They recommend immediate family member as the co-applicant, but they allow the distant family member also as the co-applicant. So let's say your parents, if they are not earning and you are applying for a unsecured education loan where the income is mandatory by the lender, in that case they will say that's fine, let your parent be the co-applicant, but also let's take your chacha who is earning, who is salaried, as the co-applicant. So what are banks or lenders looking at in a co-applicant? So there are few parameters that they check. The first being the CIBIL score. So this CIBIL score will be checked for all the members, be it applicant or multiple co-applicants. So if there is anyone among the loan structure whose CIBIL is not good, then the loan will be rejected. The second is income. Now for the students, there will not be any income, obviously, but the co-applicant and the income co-applicant, especially in an unsecured loan, will be needed. The income co-applicant will need to furnish the income documents. If they are salaried, then the salary slips along with the salary credit in the bank statement. If they are self-employed, then bank statement plus the ITRs of 2 to 3 years, plus the business registration proofs, and there are many other things that they look at to check if the income that is being reported is correct. Apart from that, they also look at the age and the retirement status. So for example, somebody who is retired and the age is 80, they wouldn't want to take that person as the co-applicant. But let's say somebody who's retired, who is 62, 63, and the income is also coming in terms of the pension, that is also something that they will accept. So all of this is not written on the stone, and that is why players like GyanDhan exist. We understand the case and we present it in front of the lender in a way that, okay, hey, you know, this profile is approvable because of this reason. The student has a very good GRE score, or the academic score is very good, or the student is going to one of the best university for one of the best course out there. So all such cases we put in front of the lender so that the chances of approval is high, and thus the students who apply for a loan via GyanDhan has 50% more chances of getting a loan approval as compared to directly approaching these banks. Moreover, the students who are applying via GyanDhan is getting a lower interest rate because of the negotiations that we do in terms of the interest rate with the lenders. So if you are looking for an abroad education loan, I would recommend you to go to GyanDhan website and check the loan eligibility. You will be contacted by a GyanDhan loan counselor who will understand your profile and will recommend you the lender as per the need, and then help you throughout the loan process free of cost. So that's it for this video. If you like our content and find it useful, I recommend you to share and also subscribe so that you can get a notification whenever we release a new video on abroad education. Thanks a lot.